Alright guys, GK the Trader here. I'm back with another very in-depth and gem-filled review. I'm going to be reviewing the NASDAQ here. Just simply because it was just cleaner than ES today. Everything that I'm talking about here, you can just apply it to ES. It's just going to be a little more sloppy, that's all. But nonetheless, Tuesday we made a high. Made a daily swing high right here. So today, what was I looking for? I was looking for us to open trade above the opening, and then trade down. So bearish power of 3. What was it targeting? Obviously, the sell side below here. If I can draw the line correctly, let's try that again. There we go. So you see we just knifed right through that with ease. If you look at the candle here, we open, trade up right to this order block low, the very low of that. So that's pretty much everything on the daily time frame here. So let's just waste no time and get right down to the hourly time frame. So right away, just like every other video, pull out the opening price. So if you take a look what took place here, right at London, we traded up above the opening, induced people going long, obviously. It's also optimal trade entry, 62% retracement level. Filling in this inefficiency here. Let me take this fib off quick. Filling in, overlapping this inefficiency, and then trading into this order block here. So you can see that there. Let's go ahead and flip to the 15-minute time frame. Actually, let me go back to the hourly time frame quick. So once we hit this order block, what do? Right after that 9:30 opening, we create a 1-hour order block. Change to the state of delivery, we displace aggressively below this low. And then once you transpose down to the 15-minute time frame, you can see that 1-hour order block turns into these consecutive up close candles here. So we have the draw on liquidity down here, but we also have another draw on liquidity down here, which would be previous day's low. Very important. I would say the markets, or the algorithm, targets previous day lows and previous day weeks more than anything else. So that's everything on the 15-minute time frame. So if you look what takes place here, we get our change in the state of delivery below the order block. And then right here we have a breakaway gap. See this? See how it didn't fill that in? Breaks away and leaves it open. So that would be classified as our breakaway gap, which simply just adds, it's basically just fuel, rocket fuel for us to continue lower. Now, the only good short that would have been in the New York session today would be this short right here. As soon as it retraces up into this 5-minute gap, go short, stop at midpoint of this wick, and then you would aim for the previous day low right here. It's pretty simple. Nice scalp for the New York session. Obviously, if you guys saw my live stream today, I did not take any trades in the New York session. However, I did in the PM session, which I'll be getting into that. That's really the good part here. But if you take your fib here, you can see right at this distribution short, it trades right up to equilibrium and then smacks down into the sell side. And then going down to the 1-minute time frame, you can see within that 5-minute imbalance, it's also a 1-minute imbalance with this 2 consecutive up close candles, which is 1 order block. So that would be a pretty decent short here. It was met with like medium resistance. I don't want to say high resistance because it wasn't that high, but definitely some resistance there and for the liquidity run there. But nonetheless, it executed. And yeah, I think that's all for the New York session here. So I'm just gonna go to the good part here, which is that PM session. So taking this off here, look what happens. We shift below this low here, the previous day low. We had this intermittent term high here formed above the midnight opening here and the 9:30 opening. You don't want to see that get taken out, obviously. We retraced right up to that 62% retracement level once again. Beautiful. What else? Let's go back up to the hourly time frame. We retraced right up into this 1 hour fair value gap right here. So optimal trade entry into that imbalance and these two up close candles here. So we have our premium raise established. Within that 1 hour imbalance, we also have this 15-minute. You see that? And then one more I'll throw in there is this breaker. Just touch the very low of that. And just for the sake of not having too much stuff in my chart, I'm going to delete that, but you can clearly see that there. Anyways, right down to that 5-minute time frame, you can see these consecutive up close candles is an order block, 5-minute time frame. Within that order block, we create this 5-minute imbalance, which is where I went short. Right here. Very important. Change of the state of delivery. Right here. And then I'm going short within that imbalance within the order block. And this inversion fair value gap here. You can look at that on your own. And what else do we have here? 3 drives pattern higher. Buy stops are swept above here. Buy stops are swept once again. And along with this 950 high that was swept. So 3 drives pattern higher. Displacement. Retracement. Short. Aim for these relative equal lows that were engineered on purpose for them to target it now. Going down to the 1-minute time frame, you can see if I add the executions on here. Now, before I go further, I would be absolutely be lying if I said this execution isn't irking my soul. Yes, I got 20 handles out of this, which is, I mean, that's a beautiful return, beautiful trade. It's just, if you saw in the video, I trailed my stop too far down. If I simply just would have waited, it would have went to my full take profit. So normally you'll hear me say, well, yeah, I'm content with enough, but for some reason it's just irking me. I just wish it went down right down to that buy limit. And not to mention all the other potential down move I could have got, but I'm not worried about that. I mean, what I got was more than enough, but it just irks me a little bit. So I'm gonna take the executions off because you already saw them. Obviously, you don't need to see them again. But within this 5-minute gap, retracement up into this 1-minute imbalance. You can see that here. This candle's high, this candle's low, separation, imbalance, and then retracing up into these 2 up close candles. And this is, remember, this is all within a higher time frame order block. I don't have it on here. You can put it on your own chart, but very high probability scalp there. And then one more thing here. I'm gonna go ahead and pull up ES. If you take a look here, it looks like nothing now because of how big the move was, but if you see here, ES failed to make a higher high here right when NASDAQ made a higher high, so we had SMT divergence as well. So that was another confluence for my trade there. Beautiful. And notice, if you guys notice the theme in every single one of my reviews here, it's always like there's not like a crazy amount of like confluences I'm trying to use. It's simple. Normally the same in terms of analysis, the same model, whatnot. Like nothing's changing here. Like it's, you don't have to overcomplicate it. You don't need 50 concepts to incorporate in your trade. You just keep it simple. But these relative equal lows here, I saw that from a mile away. They were engineered, obviously, for them to then drive it down in the PM session. And these two lows here were more likely to be traded too because we had a higher time frame draw on liquidity, which is this red line right below them. Very important there. Lower time frame liquidity pools are more likely to be traded through if there's a higher time frame PD array below them or above them. Now, I showed you all the technicals. Now it's time to show you the most important part, time of day. So, post-lunch macro, that's whenever this high was swept, 1250 to 110, so you can see that. And then right after 1 p.m., right out of that no trade zone, which is lunch, you can see right at 1 p.m., that's when the setup performed. Right at 3:15 as well, that would be the intraday 1 o'clock macro for me. So, that, in other words, that would be 3:15 to 3:45. And if you just take that entire shaded area, you can see majority of the down move happening within that 1 o'clock macro. And then right at 2 p.m. or right around 2 p.m. we were tracing doing a balance, and then off the race as we go. So hope you found this one insightful. As always, I hope it was straight to the point, clear. I would also appreciate some feedback as well if there's something I can do better, whatnot. I'll see you guys tomorrow on a live stream, 9:20 a.m. I believe.